Ladies and gentlemen, good day, and welcome to 3iinfotech Limited Q3 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta, ENY LLP Investor Relations. Thank you, and over to you, ma'am.
Thank you, Lizanne. Good afternoon to all of you. Welcome to the Q3 FY23 earnings call of 3iinfotech. The results and investor presentation have been already mailed to you, and you can also view it on our website at www.3iinfotech.com. To take us through the results today and to answer your questions, we have the top management of 3iinfotech represented by Mr. Thompson Gannon, Managing Director and Global CEO, Mr. Harish Shenoy, Chief Performance and Risk Officer, Mr. Sanjay Rava, Chief Financial Officer, Mr. T.S. Mohan, Chief Human Resource Officer, Ms. Varika Rastogi, Company Secretary and Head Legal. Thompson will start the call with a business update, which will be then followed by Sanjay, who will provide an update on the financial performance. T.S. Mohan will give an update on the people strategy, and Harish will update on the global risk and compliance. And then we will open the floor for Q&A session. I would like to remind you that anything that is said on this call that reflects any outlook for the future or which can be construed as forward-looking statement must be viewed in conjunction with the risk and uncertainties that we face. This risk and uncertainties are included but not limited to what we have mentioned in the prospectus filed with the SEBI and subsequent annual reports that you can find it on our website. With this, I will now hand over the floor to Thompson. Over to you, Thompson.
Thank you, Asha. Good day, everybody. Welcome and thank you for participating in our Q3 and FY23 earnings call for quarter 3. At the outset, I would like to wish you all a very happy and a prosperous New Year 2023. Let me start with a brief performance of the quarter. We are pleased to inform you that our third quarter performance was steady with a 2.9% quarter-on-quarter growth to rupees 182.3 crores with a gross margin of 12.7%. Going forward, the revenue mix will shift from classic enterprise business to the next generation business, and just to remind you, our grow and build strategies will start bearing results. For the first 9 months of the current fiscal year, revenues grew by 7.43% to 538.7 crores year till date, with a gross margin of 11.4%. The classic enterprise segment for Q3 FY23 has reported 142.9 crores with a gross margin of 9%. Our focus area is the new digital and the next generation business segment, and we have been branding it as New Ray, which has reported 39.3 crores with a high gross margin of 26.6%. We have also onboarded 39 new logos in this quarter and have a big potential for developing a good order book of almost 100 crores for the next financial year and helping us change the revenue mix. I've spoken about the 5-year plan to change and differentiate the new 3i. In the first year, the focus has been on identifying new areas of growth, culling out segments that are a drag on the business, having a razor-sharp focus on cost optimization. If you look at our performance over the last few quarters, you've been observing the small wins that we have been having in terms of increasing top line, while at the same time reducing EBITDA losses. I'm confident that the efforts will lead us to reach break-even levels in the next few quarters very quickly. The story is playing out as we envisaged. And while the journey has been tough, Team 3i has risen up to the challenge and almost risen up from the ashes. This year would be an execution year of new services, products, enhancing margin, and accelerating as a challenge. Just to remind all of you, we set ourselves a goal to be a billion-dollar company by 2030. I would like to reiterate our grand grow build strategies will help us reach our billion-dollar revenue goals by 2030. As we are optimizing our run businesses as traditional businesses, where the focus would be getting more business from existing customers with its existing offerings, adding new offerings and locations for the same. In Q3, we have also done restructuring at a global organization, eliminating non-profitable engagements and rationalizing cost in terms of every asset in terms of infrastructure, people, and all other assets which we have to kind of rationalize. In the Grow business, we will be investing in new lines of businesses that offer 5G technology offerings which are edge-ready, in line with our mantra being 3i being a leader in edge computing, be it like edge cloud, edge analytics, edge application, or edge security. And that's our focus area for our build businesses also, as we build new IP and new products using our resident entrepreneur program. I'd also like to give you a brief update on some of our build products and platforms which are also happening in parallel, because these will be the future engines of growth in building a edge-ready organization. Neuro Edge SaaS product is now successfully launched, and it is starting to generate revenues for us, and it is one of our big success as of one of the first products which are now into the market, and it's commercial grade, and we are now working with end customers generating revenue. And also the Neuro Edge product line, especially the SaaS product, we're also working with our telco partners in Asia as a potential sell-through and sell-with opportunities for their enterprise customers to drive B2B2B and B2B2 strategies, which we have discussed as one of the important levers to accelerate revenues beyond the traditional B2B services and help achieve our billion-dollar goal. Neuro 3i Plus cloud-powered services is launched in Malaysia and is starting to generate revenue. This is also one of our key initiatives where we are now able to start monetizing some of our investments. And this is also an important differentiator where we have launched our Oracle-powered Zero Trust Sovereign Cloud in Malaysia. Neuro Velocity, which got launched in November, is also starting to generate revenue. This is specifically focused on the mid-market to the SMB segments. And as we speak, we're also progressing in the U.S. market industry also, where we have pilots and prototypes being done and nearing close for commercial engagement in our cognitive document management solutions. I'll quickly update about our resident entrepreneur program, where we have made investments in building Center of Excellences and Center of Innovation. Just to remind you, we have invested in IIT Tech Park and Oracle COEs and multiple other investments which are made, and wanted to also kind of update you on that. Some of the divisions which are now graduated, we have now set up independent subsidiaries to unlock value. Neuro Future Tech, a private limited, will focus on cutting-edge platforms in cognitive computing. The first platform which is being rolled out will be a CXO cockpit, which will provide decision support systems, prescriptive analytics, and next best action for credit unions in America, healthcare providers in UK. Similarly, Neuro Campus will be a multi-tenanted ERP SaaS-based model for mid-tier universities to manage end-to-end student life cycle. Neuro Edge Tech will consolidate our investments in edge computing and will build other products and edge-ready products apart from Neuro SaaS, which has been launched. We're also building other products such as our 5G labs for interoperability testing, and also we want to specialize in the agri-tech space as well. Finally, if I quickly summarize some of the performances for this quarter, the global business region, which includes US, Middle East, UK, our revenues have been 109 crores. We have grown around 1.6%, quarter on quarter. And India has been a fantastically strong region for us this year, and the revenues has been 67.3 crores, and India's quarter-on-quarter growth has been 5.2, and year-on-year we have grown 35.2%. APAC performance has been more or less flat. Quarter-on-quarter we've grown only around 1%. But if I look at it, despite headwinds in U.S. markets, we have managed to grow despite closure of many professional services contracts. There's plenty of headwinds in terms of layoffs and reductions in U.S. But we have managed to keep growing, replacing the other service lines. Q3 has always been a tough quarter with furloughs in U.S. and attrition due to green cards, but we are standing up to the challenges and fighting back with alternate revenues and keep on with our growth story. As I said, India business region witnessed solid growth both on existing and new clients. We've been winning multiple large deals, not just in our traditional strongholds, but I know very happy to talk about some of the wins even in our Oracle COE as it's starting to pay off. We just got our first contract with SBI General, a 16 crore contract for Oracle COE as well. Apart from the other large wins, just to summarize in the quarter, we had this major win in terms of RailTel Corporation, which is going to be one of our path-breaking projects, which has a potential to go beyond a potential to grow up to 500 to 1,000 crores over a period of 5 years. And at least a minimum potential value of 300 crores in this project, where we are working with RailTel to monetize their Wi-Fi. And this is a great fitment for 3i's ambition into edge computing, because all our levers in terms of edge cloud, edge applications, edge analytics, edge security come into play. And this also talks about our ability to work in B2B2C space, which the revenue acceleration could be extremely fast and the velocity of growth could be far, far higher than the classic B2B services space. We have also won other contracts with brands such as Eureka Forbes, which is around 10.25 crores, and HPCL, we have won a 3-year contract for 51 crores. So these are some of the key highlights I would probably want to talk to all of you, as our company has been working hard to deliver some of these results. And I would like to thank all of you for all the support and encouragement you've been giving us. And I'd like to pause here, and then I'll probably hand over the baton to Sanjay to take us in detail about the financial numbers. Sanjay.
Thank you, Thompson. Good afternoon, everyone. I would like to start by providing key highlights on the financials for the quarter ended 31st December 22. Our revenue grew to 182.3 crore in comparison to the sequential quarter revenue of 177 crore. This reflects the 2.9% quarter-on-quarter growth and a 10% year-on-year growth. On the employee cost front, we had a reduction this time in the overall employee cost of 8.9 crore compared to the last quarter. This was primarily due to 3 factors. One was we had a lower ESOPs which have been exercised during this quarter. Second would be a one-time variable pay that we had an impact in quarter 2, and a substantial amount of reduction in our overall cost in the US territory, and other cost reductions that has been happening globally. On the cost of third-party products and services, we are more or less in par with the Q2 numbers. There has been a slight increase there. That is due to the exchange impact on our US operations. Other expenses for the quarter has been flat at 22.6 crores. I'd now like to give some highlights. So overall, our EBITDA, if we see on a consolidated basis, we are right now near to, I would say, a break-even number. We were at minus 17.9 crore for quarter 2. We right now stand at 3 crores and near to a break-even number in this quarter. Coming to the other elements of our P&L, we had 19.7 crore of exchange gain during this quarter. This is in continuation to our earlier quarters translation gain that we had due to the rupee being depreciated to the dollar. That has continued further. The rupee has slid further during this quarter, which resulted in the exchange gain. We have some exceptional items during the quarter as well. Due to the final closure of our Essential deal, we had to have a gain on the property that we had to give it back to them as part of our overall deal consideration, but that did not materialize through. So we have now taken back the property in our books and due to this, we have a gain on account of the value that we have reinstated back in our books. This has been offset to a certain extent due to a withholding tax, a one-time withholding tax that we have come during this quarter. This impact has come during this quarter. This withholding tax charge has come on our Saudi Arabia territory. This was pertaining to some old matters prior to March 2022, which we were able to resolve, and we have this one-time impact. So overall, we have a net exceptional gain of 7.6 crore for the quarter. Tax, coming to tax, we have calculated our overall tax computation for the year, considering what profitability we would have at the year end. Hence, we have a charge on account of the tax of about 1.5 crore. This is primarily in the US subsidiary and for our BPO and CSL operations. Overall, on the balance sheet, I would like to just, though we are not providing any data on the balance sheet, I would like to give some highlights on the balance sheet. On the cash in hand, we have improved quarter on quarter. We had a cash balance as of 30th September of 55 crores we had reported. We stand as of now at 81 crores on the cash balance. On the DSO front, we are on the billed DSO at 54 days and the unbilled DSO at 48 days. Overall, we are at 102 days. There has been a slight increase in the DSO due to some government customers, sign off being pending, but we expect a significant improvement in our DSO in this quarter, in the coming quarter in Q4. And on the last front, I just want to give an update on what additions we have made on our fixed assets. Our fixed assets grew by about 70 crores in this quarter. This was on account of the property, the Vashi property, which we had envisaged to sell to Ascensio, which did not materialize, and hence we have capitalized it back. So these were some of on the financial number highlights for the quarter. I would now like to hand over to Mohan to take it further on the HR front.
Hi everyone, good evening. This is Mohan. Just a very quick update on the human resource front. As we conversed in the previous quarter, our continuous cultural change initiative to be a performance-driven culture organization has been kicked off. In that direction, we see a significant improvement in employee and employee-related productivity measures. Just to give in terms of headcount, from the beginning of the financial year, we grew by 11.4%, and in this quarter, we grew by 5.6% net additions. And our attrition by end of this quarter 3 stands at 25%, which is 9 percentage points less compared to the Q3 of the previous financial year. So while we continue to enhance the culture performance, we continue to focus on critical employee engagement and retention drivers. Yeah. So when it comes to the average age of our employees, it continues to decline. So that indicates newer absorption. And in terms of supporting the resident entrepreneurship program and future tech organizations and build organizations, we continue to invest on skill building. Our university, which we set up, our internal academy, which we set up for Oracle competency, has seen 86% consumption to billable roles in last quarter. So this is a significant movement in the success in the investment versus the amount of business utility in that program. Likewise, we continue to stay invested on the future competencies and in line with our business strategies. Thank you so much.
Thanks, Mohan. Good evening, everybody, and thanks for joining in on this call. As you have all heard from Thompson and Sanjay, that there has been a marginal growth in revenue and a reduction in the cost front, both direct and the SG&A, with appropriate rationalization across the organization wherever required. So our efforts will continue in the same directions, and their numbers for the future quarters will only be improving here on with more rigor in the operational efficiency that we are running this organization. So that's more from a performance perspective. From a risk perspective, as an organization, we had a dedicated GRC division over the last 2 years, which we were very focused on ensuring that we have appropriate governance as well as compliance to all the regulatory and internal processes. So as we have been maturing in that process, we have a risk management committee that has been formed at the board level, which has happened over the last 2 quarters. And as in process there, we have been assessing all the risks that might impact the organization's in its growth plan. And one of the areas that we had identified as part of that process was we have quite a few regulatory issues open for a substantial time, like that's there much before the 2 years that we have been into operations. To address that, we have a board level some committee that has also been formed under the guidance of CA Uttam Prakash Agarwal, who's been the ex-president of CA Institute, and also Mr. Avtar Monga, who's managed ops for large MNC banks and also some private sector banks. So that we are in the process of building best practices in corporate governance as well as business operations, risk and control. As we scale up our global operations and where we see substantial increase in the top line as well as improving our bottom line also. So this was just an update on the GRC functions of the organization. So back to you, Asha.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Siddharth Gupta from Voyager Capital. Please go ahead.
Hey, good afternoon, everyone. Congratulations to Thompson and the rest of the team for posting an encouraging set of numbers. I have very few quick questions to go. First of all, can we get a breakup of how much of the revenue is coming in through our newer products and how much of it is coming through our legacy services? Secondly, when the RailTel deal was announced, it was said that about 14 crores is something that we'd be required to pay to RailTel. Was that accounted for in this quarter, or would that be something that we can see in the next quarter? Thirdly, I could not follow the conversation about the property in Vashi. It's back on our books, but what's our management's intent to keep that property on, sell it off, lease, raise some working capital debt against it? And just finally, do we have any equity or debt raising plans in the future? I understand we're net debt free as of now and our cash position appears to be good. But do we have any plans that might need us to raise equity or debt in the future?
Thanks, Siddharth. Thanks for that encouragement. So I'll try and answer your questions, the 4 questions. One is your first question is your new product revenue. I did touch upon it broadly. If you look at it, we started tracking it and publishing it also. Our classic enterprises business gave us 142.9 crores with 9% GM this quarter. And the new line of business, which is our new rail line of services as well, has given us 39.3 crores with 26.6% margin.
Oh, that's fantastic.
Yeah, that's the first question. The second question, you spoke about the RailTel deal as well. Just to refresh our memories on the RailTel deal, if you look at it, it's a revenue share deal, and obviously the minimum guaranteed revenue for RailTel per annum is 14 crores, or 40% of revenue, whichever is higher, just to refresh our memories. So there are 2 parts to it. One is a bank guarantee or a performance guarantee which you give, right? Vis-a-vis your actual payout which would come. To your question on for what it needs to be accounted for this financial year, it has been provided for basically because it is only for this financial year, which starts from February 9th to March 31st. Okay, so that is for this financial year, and that pro rata, whatever it is, though our teams are working hard, and we will provide that in our Q4, Siddharth, for that period.
Okay.
Because that we will take time, because we still have time in March to generate revenues. We'll take a call at the end of March, if you ask me.
Right.
We are very optimistic that we might generate revenues which might not need us to provide for any negative.
Right. Okay.
Siddharth, coming back to your other two questions on the Vashi property. So what has happened is our deal consideration, as part of the deal consideration, there was I would say a negative income on account of this property value, which was considered when the deal was concluded in March 22. So we had 50 crore as the payoff for the working capital, which was to be set aside against the property sale to them.
Right.
But the value of the property that was sold to them at that point in time, based on the valuation that we had done, was that I would say net of depreciation was, so it was totally at 81 crores. And what we have done is there was a certain element of depreciation also not accounted. So if you see my depreciation charge in the P&L, it is up by about 2.6 crores. That's primarily due to the depreciation getting accounted as since the asset has been reinstated effective from 1st April 21 in our books.
Yeah.
So we have a charge on depreciation coming in, as well as the net on account of that is I have reinstated my asset value by 73 crores, and I don't have a liability of 50 crores. So that's the math on that working out to 23 crore net. I would say not I would say a gain in technical terms, but it's a net income that has arisen now because we have not sold off that property to them. The other one that you were saying on the...
Before you go there, I think you asked a question on what we intend to do with that.
Yeah, that was the
property. Yeah.
So that we are also working on other getting the required documentation with CITCO for getting an NOC from them. And post that, we are anyway, post that we are anyway going to have it leased out, or we're going to sell it off.
No, I think we as an organization, we have our growth plans aligned, and in all probability, we will be utilizing that for our own consumption, and instead of going into rental places or any other places. So we're keeping our cost low for our operations.
Yeah.
Okay. That's a great idea, actually.
And the fourth one you asked about.
Yeah. On the fundraising fund, as I indicated in my initial comments, we have a net addition to our cash. I mean, this was part of our original plan to get most of our non-current assets liquidated, in the sense collected. So we have some good amount of income tax refunds that we got in Q3. And the fundraising plans will anyway look into post the quarter end after Q4.
Yeah.
Okay. Thank you. That's it from my side. Thank you so much. This was a great set of numbers, and thank you for the clarification.
Thanks, Siddharth.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Divya Daga from Vijit Global Securities Private Limited. Please go ahead.
Hello, sir. My first question is from point 6 in standalone notes. That please clarify me the subsidiary transaction that you have of account receivables and payables. How long will it take for the settlement to go on? Hello?
Heard about. So this is about related to point 6 that we had mentioned about the intercompany receivable and payable balance, right?
Yeah.
So we are anyway working. We have given our application to Reserve Bank of India. So we are working with the bankers to have the set-off completed, and We expect that to happen sometime in the next financial year.
Okay. My second question is, from the point 8 in the notes of standalone, can I know the nature of assets and why this slump sale took in financial year 2020-21 and it took so long to take the settlement clear?
Okay, so what has happened is the part of the slump sale was transitioning 3 floors of our Vashi offices to Essential. And to do that transitioning transfer of that property to Essential, we were required to have a no objection certificate from CIDCO. So due to historical non-payment of rent on certain properties, there was some delay in getting that NOC, which we are working with the CIDCO guys. And that's when we were not able to transfer it within the given time. And that's the reason we could not conclude it earlier.
So can you explain what were the type of nature of assets, like they were intangible assets, patents or anything else?
Tangible assets, 3 floors in the Vashi International Infotech Park.
These are primary buildings in the Vashi Infotech.
Okay. Okay. And my last question is, as I saw in your segmental revenue, that there is not much growth in revenue, but there is a lot more growth in gross profits in AAA as well as in other segments. Can you explain me the reason? Is there any particular reason regarding that, or it's just cyclical?
No, as I explained, I think even the previous question was that it's a very concerted effort to change the mix of revenues, if you look at it. Because our classic revenues get lesser margins because traditionally we don't have much of offshore mix like other services company, because originally before the sell-off of our product division, we are a product company. Now the last 18 months we are building these new service lines, and those are starting to generate higher margins. So if you remember, I explained the segmental revenue 142 crores was with 9% and 39.3 crores with 26.6%. So most of the digital businesses and all that you're talking about falls into that category.
So will this be margin consistent in coming quarters as well? Means we will get this much margin?
Mix will continue. And if you look at even our US also, if you look at it, we are having headwinds on our traditional, professional services and human capital businesses, which are, under hit. But we are able to hold our numbers basically because we have been replacing with other profitable businesses, if you look at it.
Okay. Thank you so much. That's all I have.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Purushottam Savlani, a retail investor. Please go ahead.
Yeah. Good evening. Thanks for the opportunity, and at the outset, congratulations for better looking numbers. My number one question is, if I look at the slide which talks about the 10-year plan, it says FY23, which is the current year, we'll end up doing $95 million. That translates to 770 crores. If I look at what we have done up till December, is 538 crores. So are we saying we are going to do 230 odd crores in Q4? That's number one. Number two, while we made investments in our global regions, global geos, but we have not heard considerable wins coming. Generally, these geographies in US, UK would give you orders to tune of say $10, $15 million TCV, etc. We have not heard much in last couple of quarters. So I don't know what is happening there. Can we get some visibility with regard to the deal pipeline or some wins which are there in the vicinity? Third is, we talked about our cost being high because we have a lot of onshore components. We are not able to move these people back to India because of whatever client commitments, etc. we have. Though one agrees that, but one fails to understand that if we have more onshore people, then our revenue realization should be at least at par with our competitors. The irony is, while at one end our cost is higher because we have onshore components higher, but at the same time our revenue realization is nearly half of what our competition does. So this is a dichotomy. I mean, this is something which is ironical, goes against the principles of offshoring also. So these are a couple of things which I wanted to ask you.
Thanks, Kusuman. Great questions. I'll try and answer to my best of my ability. The first question, as you said, is there are two parts. One is we spoke about a kind of a midterm to long-term strategic intent, where I think you spoke about that 95 million. In fact, I remember saying in the third year, this is when I took over, the new team took over, our mantra was 1,000 crores, 100 crores as a rallying point for us. And last year, for this financial year, which is our second year into this new 3i, we set a goal for 760 crores and 15 crores PBT. So that was the target which we are running with. So as of now, if you look at it, we are at 538 crores, and definitely we are still focused on trying to see if we can hit our 760 crore numbers. But our number one priority is if let alone PBT right now, because we have these exceptional gains and all of that which are there. But as a team, we are very focused on building a operating margin to be profitable. That's our first milestone. Second, consistency and ability to sustain that and predictability in that margin. So that's a very, very clear focus area, Purushottam, for us. That's the number one. So that's the first one. See, once we do that, the foundation is strong for us to accelerate. So that's what we want to do in the next 1 or 2 quarters, okay, including Q4 and Q1. That's on the first point. The second point, very valid observation on the global business region. As I said, see, there are two parts. I will try and set that context for your third question also, which you spoke on our onshore businesses. Maybe we'll have to kind of a little bit rewind and come back to our current scenario. See, post the product carve-out, we had onshore businesses which were typically complementing businesses to the product or platform. It is not like a traditional services business where we are running. So, but we need to be very clear. 3iinfotech 20 years has been a product platform-led company which also did services which complemented. So it is very, very different from a traditional peer who does services. I work for companies like that, and I absolutely agree with you. Those are different type of thinking and different type of strategies, very, very clear. From where we got that to where we are heading right now. Now, as we are flying the plane, we have to change the business. Of course, those onshore businesses are low margins because they were complementing certain product divisions or they were coexisting in the same account which had bought my platform or product. We had a separate statement of work doing onshore work which is linked to it. As an example, I'm saying. And very few, and the services business was also predominantly in professional services in some of these areas. The headwinds, for example, the first step which is happening is, if you look at US, the last 2 quarters have been a literal bloodbath there. If you look at a clear bloodbath, 2 things. One is for even a smaller firm like us, where green cards have been accelerated. It is one of the biggest impact for all of us, because obviously green card again and the value of our people assets goes out the roof, because obviously they have been with you loyal. But fundamentally, when you get a green card, they are obviously worth much higher. It has 2 impacts. If I retain them, our margins have to be sacrificed. If you look at your spot on, so we had to sacrifice our margins to retain people assets because obviously we had to compensate, otherwise they're going to leave. The second one, if I allow them to go, it has an impact on my top line. So these are 2 problems. If I retain them, it impacts my margin. If I allow them to go, it impacts my top line. This is one scenario which is impacting us. Luckily, some of the seeds which you have sown in terms of even small deals, forget about large deals. I agree with you, we're not one very big deals or whatever. Small deals, we have been working very slowly, getting some logos, because nothing great to be, publishing about it. We have won a lot of new logos. But slowly we are doing that, and that is probably helping us to even manage this impact on one side. That's why you see there's not much big difference or movement in our geo numbers. If you look at it, we've been able to hold where we are. To your point, so I'll give an update on what we are trying to do differently. So one of the key areas you'll see a lot of press coming out, and we are very active is, in the last 18 months, we have been very active in the credit union space. In America, where we are working with some customers of ours very closely, we have walked the entire journey with them, right from transforming their data, warehouses to building their cognitive computing analytics on top of it, and trying to see if we can, work the entire members, they call the members, right? They're not customers. Member life cycle, management, experience management, the entire end-to-end we have progressed. And now we are saying along with them, can we take it to other credit unions? So our focus area will be on credit unions. These are your mid-sized cooperative banks, so our equivalent in India is in America. That's our focus area. and that's where we want to work. In fact, we are participating in this massive events where we are co-branding with them and going to market. So that will be a very key focus area to offer some of these services co-branded with our customer to other credit units. So that is number one strategy. We will see a lot of progress and traction on that. Second is also we are working in the mortgage space in America. Again, what we have done is applying some of these cognitive, intelligent document management is an old terminology, but now it's more cognitive, and we have this next generation automation which is there, by which we are now trying to work on the mortgage industry. And one of the things which is helping us, even the recession is helping us in the US, because this is driving to the need for innovation and more, low-cost services which we can offer with higher-end digitization. So that is also we are now looking at with higher automation with onshore services where the margins could be minimum 30 to 35%. Those are the two tracks where we are working. And right now, if you ask me, Purushottam, the offshore story is over. We are very late in the game for that. We are very late in the game for that. We have to work only on onshore with higher digitization, higher automation, with lower human, and try and see how to manage gross margins. And huge headwinds are there for new deals for offshoring. It will be either nearshore or onshore in the Western markets like US and UK. So that is my, I don't know whether I answered that question, Purushottam.
So Thompson, I appreciate the answer. While I understand that cost will come down or margins will improve, my worry is with regard to the realization. Realization per person of 3i is approximately half. Now, when we have more people sitting on site, their realization has to be better. I mean, we cannot say that engineers sitting in the US will draw lesser realization than a competitor whose manpower is sitting in India or maybe other countries which are offshore. So realization has to be better, which is where I think we are getting beaten on the revenue per person achievement. It's not happening predominantly because our revenue per person is much lesser. In fact, it is half of the competition. This is the point which I've been trying to highlight for a couple of quarters. I would request if you can ponder on that.
No, absolutely. I think even the last time we spoke about it, we are working on it. See, the whole thing is, we are making these are like parallel tracks, right? As we fix the current ones, we have to also build the new lines of businesses, and these will converge. Maybe in 2 quarters, you'll start seeing the change which is happening in terms of revenue per employees, and it's a very clear change we are driving. And also measuring the human loop as well, Purushottam, because that's very important now. The next generation is what I do with 100 people, can I do with 60 people with 40 with humanoid? That's where the margin and that's what we are focusing right now. And I'll promise you will see the change in that in the coming quarters.
Okay. I appreciate that. Thompson, last question. See, going back to the numbers which you have given, FY23, we are talking $95 million, which is 230 crores we have to do in Q4. I'm not sure whether we'll do it or not. But going forward also, if I look at it, next year we are talking about 122 million, which is growth of close to say around 27% year on year. So are we sure that we are going to clock that kind of growth next year?
No, there are 2 parts. One is because there's an opening statement of intent, but we want to calibrate. Definitely our first milestone is 760 crores is something which we are running right now. We are not giving up on that. We will do that. That's a momentum which is very, very important for us to accelerate for the next year. Order book is picking up for sure. Next year, definitely we want to rally with our old, commitment, and we want to rally the organization on that and try and see that in terms of, 1,000 crores, 100 crores. But the important milestone for us would be when do we hit the 80 crores run rate per month, Purushottam? That's my key tipping point if you ask me. 80 crores, 10 crores per month is something which we want to hit from an operations perspective. If we can hit those numbers, I think the pace will set.
Yeah, because unless we achieve that, our $1 billion goal of 10 years will get postponed further unless we start.
I'll tell you that. I'll tell you the second thing. Maybe it's not showing right now. Maybe slowly I'll start showing you that. The B2B2B and B2B2C is starting to fire, Purushottam. If you look at RailTel, for example, it's our first B2B2C. Once they start firing, I'm telling you, those are going to be alternate streams of revenues, which will complement our typical B2B services revenues. Because with B2B services, we'll never be $1 billion in organic growth. Okay, no way on that CAG will reach there. So B2B2C of RailTel will add to that. And I told you about B2B2B, where through telcos we are trying to sell it to their customers. So So these are amplifiers of our accelerators of revenues. So if you look at it, three tracks, B2B2B, B2B2B, which is through telcos, and B2B2C, which is our RailTel project. When you add these three, then we'll be able to hit those run rates.
Okay. Thanks, Thompson, for also answering all the questions, and I hope that next time when we talk, we'd have concluded quarter on operational profitability as well. Thanks and all the best.
I'm looking forward to it. Thanks for the support, Kushal.
Yeah, thanks.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Prabhu Anand, an individual investor. Please go ahead.
Hi, Thompson. Congratulations again on a decent set of numbers. My question is about RailTel order actually. In this RailTel order, I remember you have been talking about 5G, edge services, all those things, but did we actually plan for any development work? Has there been any previous work that has been going on, development work that has been completed already, like an app? Because the whole thing rests on mobile. So how much development work has been completed for this already while you are preparing for the bid and other things? And how much is yet to be spent for the development, the product roller? And what is like a timeline, internal timeline for rolling out the product to the end users?
Hey, thanks, Prabhu. Great question, and it's one of my favorite questions. I'd love to answer that, so I'll try and start with that. See, the RailTel deal, if you look at it, I'll try and answer it from a 2-3 perspective. From a starting perspective, it is from a monetization or an asset, asset utilization extraction partnership, the way I look at it. So RailTel has got some assets today. They have Wi-Fi, they have certain infrastructure, they have certain presence, whatever it is. We are just partnering to first, can we help you monetize it better by running a better end-to-end operations from our perspective? That is step 1, which we need to focus immediately because that is where the revenue gets generated for both parties, and both of us will start being able to reinvest that, and we will be also reinvesting that back into our operation. The second stage is where what you spoke, Prabhu, is development of a super app. The super app becomes the whole, nucleus of all this stuff. So today, day 1, the app might not be a super app. Now, maybe in 1 month's time or whatever, I'm not sure of the exact timelines, we'll be launching the normal app, I'm saying. Today, it is just a portal. Then the normal app gets launched, and any passenger can, if to use the Wi-Fi, has to download the app to use the Wi-Fi. And we will have the advertisements and other things coming by which we'll start generating the revenue. Then the phases of the app will start evolving. Then the app starts interacting with all other one-stop shop for a passenger. Whether it is going to be IRTC, I'm just taking an example. Whatever it is, all that links will be built in our super app. To your answer, the development and all that is starting now. We are starting it. Second, it's an ongoing thing. Then we start getting into other lines of businesses. Let's say, for example, we could link into an Uber, we can link into a Zomato or a Swiggy or whatever it is. Every line, infotainment, he wants to do gaming, he wants to do infotainment, all that are new revenue streams, ultimately. So that roadmap will be at least 3 quarters. So the first focus is we have to start generating revenue with what we have, sweat these assets, make more money. In parallel, keep investing in these app development. We'll keep releasing quarter-on-quarter features of this. Ultimately, the app becomes a super app maybe in 3 to 4 quarters, Prabhu. I don't know whether I answered your question.
Yeah, kind of actually. I was just wondering, you have actually in the press release, it was given a 40% revenue share to the RailTel and 60% with the 3 vendors, of which 3i is part of the consortium. So it is the remaining 60 will be shared by all 3 of you. Am I right to say that?
No, see, look at it this way. 3i is the lead bidder, lead bidder of the consortium. Obviously, we need to have people to complement some of our technologies. Let's say, for example, we have no capability in media or an advertisement or whatever it is. So we have a partner who helps in that. We have a partner who helps in certain security services. So some of these very unique, and each one has brought something to the table. To your point, we are the lead bidder, and we will have if you look at it, almost 90% of the entire thing will be led by 3i, for your information.
Okay. Thanks for that information. And I believe you have answered the question about the fundraising earlier to the earlier questioner, but I just want to reconfirm. Like the cash in hand, you have actually mentioned it is 80 crores as of the quarter end. But is the increase in cash purely because of the gains that resulted from the property, or it's something else also has resulted in the gain? Like how much is the cash increase due to various sources?
Yeah. So as I mentioned in the earlier gentleman's query, it has increased due to collection of our old income tax assets. So we had some income tax assets in terms of tax deducted at source for various years. So that has been realized during this quarter.
Okay, so more money has come from income tax than anything else.
No, I mean, so just to answer your point, we have our debtors in line with our operations. So since we are yet to generate cash from operations, our working capital needs are kind of, we're not generating cash from our working capital, from our operations. So our cash addition is from accrual from other sources that we have collected. Yeah.
Okay.
I hope I've answered your point.
Yep. Okay. Thank you. I think that's it for me.
A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Divya Zaga from Vijit Global Securities Private Limited. Please go ahead.
Hello, sir. I have one more question to ask. As I saw in financial year 22, you had a net profit, but the cash flow from operations was negative 50 crores. Same goes in 6 months, financial year 23. We had a net loss in cash flow of 24 crores. And in this quarter, we do have a profit, but what is the cash flow? Is it positive or negative?
So cash from operations would be anyway a net addition. I'll answer your point.
My point is, in this quarter, whether the cash flow from operating activity is positive or negative, and what is the amount, if you can provide me?
So it is positive. It would be less than 10 crores. It would be to the tune of 4 or 5 crores. Between 4 and 5.
Okay, sir. That's all I have. Thank you.
Thank you. The next question is from the line of Harpreet, an individual investor. Please go ahead.
Hi, Thompson. First of all, many congratulations for giving the steady performance in the Q3 numbers. I have 2 questions. One is that you discussed about a product called SD-WAN few quarters back, that it is going to be commercialized from the quarter 3. And what is the status of that? And the second question is, any plan of rebranding 3i?
Okay. Thanks, Harpreet. So I'll try and answer that second question. If you look at it, the rebranding is actually happening. If you look at it, what we are doing is they are parallel tracks, right? There is a recall for 3i also in the banking space, which is there, Harpreet, the BFSI space. The entire new ray, if you look at it, is the new lines of products and platforms and services we are all building under the new ray brand, Harpreet. So that's the brand which we are rallying around that. So the new ray is your new digital business, your next gen business, and everything is new ray. If you look at it, your new subsidiaries, our new product lines, everything is new ray. So that is what is happening. And these 2 parallel lines will probably converge at some point of time. So they will coexist. Your classic enterprise businesses with 3i, and the new ray is your new digital and your next gen business and all your new products and platforms. And they will converge at some point of time. They will be at parallel tracks. That's where it is. The first question you asked me is on the SD-WAN. Of course, we are working on it. So SD-WAN is, again, as I said, this is part of our 5G core. And the first product which we have to get out of the way is the 5G lab as a service, Harpreet. The other one we are working is on the SD-WAN. Maybe I think we should be able to give you some answers in the next quarter. Hopefully we'll progress this month, this quarter, and we'll be able to give you, at least we want to get into a kind of prototype stage at that point of time. We are a little more slightly early stages. We are trying to learn from some customers as well. But the 5G lab as a service are more mature right now, and we want to release commercially very quickly.
Fine, Thompson. One more question, Thompson. As we see the news in North America, like many companies are laying off the employees, are we trying to monetize the situation by hiring some of the talent there?
No, great question. In fact, we were debating about it also. The answer is definitely we are looking at alternate strategies because as a much smaller company, faster, swifter, and we are looking at how to leverage that opportunity. At least for short term, we see a huge flex force available. The way I look at it, I doubt their loyalty, to be very honest, Harpreet. So, but at least we can leverage them in the short term for 2-3 quarters or 4 quarters where we want to look at a kind of elastic workforce and see if we can monetize. We are building plans around it, and we are getting a lot of inquiries in those aspects, to be very honest.
Sure, Thompson. All the best for Q4. Expecting a good jump in top line and positive bottom line, Thompson.
Sure, Harpreet. Thanks a lot.
Thanks.
Thank you. The next question is on the line of Prabhu Anand K, an individual investor. Please go ahead.
Thompson, this is actually about the Malaysia sovereign cloud. I actually forgot to ask earlier. In the previous readout, you mentioned about some customer wins in the Malaysian sovereign cloud. Can you just throw more light on the Malaysian sovereign cloud and how is it going? And do you have any partners for selling the services, or how is it like going on there? That is the first question.
Okay. Yeah, please go ahead, Prabhu. Yeah. You have one more question?
Yes. The other question is actually about the Oracle SOE. Like you also mentioned that you are anticipating more service, like existing leads coming from Oracle for their existing base. Like how is it going on there? Okay. Any light on that? Because in the press release, in the last time you used to share it as a kind of a breakup of all the services. This time there is no such presentation that has reached us. So.
Oh, I'm sorry. In fact, okay, we will try and add that for sure, and we'll do that. I'll take that input, and we'll give you a more breakup of some of these.
Yeah, before the presentation, if it starts, means it will be easier to refer it so that the questions can be avoided sometimes and can be clarified on the call.
No, absolutely, I agree. Point taken, and we will take our work on that input and try and see if we can do it earlier and better, for sure. So I'll try and answer your question. One is on the, I think I'll step back. Most of these Oracle COE, whether it is our new 3i Plus cloud or any of these, what we have done is strategically we are investing in building a very, very solid channel or alliance management organization because it's a different kettle of fish compared to our typical direct B2B business, Prabhu. Okay, that's the first thing we're doing. We have brought in a senior leader to help us build that also globally. We'll see some announcements going out shortly. To manage Oracle relationship in the geographies, work with the salespeople, work on some of those named accounts, that is one. Second, also set up the entire channel network to drive this business because this is also channel-driven, value-added resellers, SI partners, we should do it. So we have set up that unit. This also helps us rationalize our costs as well. So keeping an eye on our costs to see how we can bring down our sales costs, balance our sales costs in between direct, new logo coverage versus existing account management, vis-a-vis to channel and alliance. We are doing that. That's on a slightly strategic level. And also it helps us optimize our costs and maximize our ability to go to market faster and accelerate our revenues in some of these new lines of businesses. Coming specifically to Malaysian sovereign cloud, if you look at it, we have already onboarded 2-3 customers where we work with. It's again a great question because our immediate customers have been through partners and through other product companies, where they have their customers. So we have helped manage those product companies migrate their customers into our cloud because we are able to give better service at a lower cost. So we have done that. The second thing we have done also, we are also positioning this as a disaster recovery as a service for even enterprise companies. In fact, pilots are moving on. Hopefully in Q4 we'll be able to do that. So this is, we are saying as a BCP option, they might have their primary cloud services wherever it is. Now we are saying please have your sovereign cloud in Malaysia as a disaster recovery even for some large Malaysian corporates. So that is happening as a strategy. The second, if you look at it, you also spoke about leveraging the Oracle COE, which we have moved very fast there. If you look at it, we set up that Oracle COE in a Tier 3 city in South and Chennai Valley. We had our first batch of almost 75 engineers. The good news is almost 80% of them are graduated, certified much earlier and also deployed also. That's a good news. And we were surprised because we were able to accelerate that 2 months in advance. And some of the scores these youngsters, engineers have got has been phenomenal compared to even Oracle standards. So that's a very positive for us and reaffirms our entire strategy and belief as well. And now we are accelerating that to the next level. And we also won some of our first True Blue Oracle COE end-to-end deals. Announcement will come. SBI General, we have signed the MSAs and contracts for total end-to-end Oracle application management services. This is all one on the backbone of these investments we have made, and now we'll be able to accelerate it faster.
Sure. Congratulations. Because I was just wondering if any news on those things will be coming, and it's still waiting. So thanks for the update. Thank you.
Yeah, we're just waiting, from a PR, but I thought I'll make the announcement today. It will keep coming. Yeah.
Okay. All the best and all the best for achieving all the milestones that have been planned along the many years that come.
Yeah. Thanks, Prabhu. Thanks for your support.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Thompson for his closing comments.
Yep. Thank you, Asha, and thank you one and all, and thanks for from all the questions from Siddharth, Purushottam, Prabhu, and Harpreet, and thanks for all the support, and Divya as well. And these are great questions, and fundamentally, this also helps us stay motivated, gives us the outside-in perspective, helps us to be grounded and calibrated as well. And thanks for the support, and and talk to you all soon in the next quarter. Thank you.
Thank you. Ladies and gentlemen, on behalf of 3iinfotech Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.